Hi. Today's our topic is about internal control and corporate governance. Internal control is the key element of an organization. All the companies required proper internal controlling system. Internal controlling system minimize the risk of the organization. That is why all the organizations are adopted a proper internal controlling system in their organizational flow of work. What is the exact meaning of internal controlling system or internal control? Internal control is a mechanism, rules, procedures implemented by the company to ensure the integrity of financial or accounting informations. In simple, we can say this internal controlling system is a mechanism, or we can say some rules adopted by the companies to ensure their integrity in financial and accounting informations. Financial and accounting informations are the most important part of the organizations. The failure or the success of an organization is always depends upon the financial results. So we have to adopt a good internal controlling system to ensure the integrity of the accounting informations. Then we have to understand what are the main components of this internal control. Internal control had mainly three components. Number one, preventive, detective, and corrective actions. An internal controlling system adopted by the company should have a preventive step, detective step, and we have to take some corrective actions. Then what are the examples of internal controlling system? Number one, you can segregate your duties into different people of the organizations. Pre-approval of all the actions. Many actions are happening in an organization. Each and every action, there should be a pre-approval is required. This is one of the controlling system. Access control. Different people have different type of access. Some people have GL access. Some people have cash flow access. Some people have fixed asset access. So there should be a controlling system, access control, that should be protected by passwords. And physical control over the assets. We know that assets are the most important resources of the organizations. All the companies are earning their income by proper utilization of their assets. So we have a control of all these assets of the organization. So what are the common internal controlling system or the common internal controls adopted by the companies? Accounts reconcile monthly. All the GL accounts you can reconcile monthly wise. This is a good internal controlling system. Then leaders will review all the financial result of the organizations. Limit on check signing limit. All the people have no authority to sign the check of the organization. Then physical access to cash. Some of the people only have access to the cash and inventory keeping. What are the principles of internal controls? What are the main principles of internal controlling system adopted by the companies? Establishment of responsibility, segregation of duties. You have to segregate the duties of the people in the organization. Documentation procedure. All the documentation, there should be a proper procedure. Physical control over all the assets and other important matters of the company. Independent internal verification. You have to independently verify all the documents of the organization. Then human resource control. These are the main principles of control activities. Next, our topic is corporate governance. internal control in corporate governance. What is the meaning of corporate governance? We know the meaning of corporate company. Corporate governance is the combination of people, policies, procedures, process that help an organization to run effectively and efficiently for attaining the objective of the organizations. So, corporate governance means a group of people will be there, procedures are there, policies are there. All these directed towards the organizational goals of the organizations. All the activities we are doing for the company is for the benefit of the stakeholders. Stakeholders are those persons, any activities of the organizations are affected by some of the people. That people we can call as stakeholders. So an organization can be corporate governance, internal and external. So governance can be internal and external. So internal means corporate charters, bylaws, board of directors and internal audit functions are internal. External means what? Some laws, regulations and the government regulators, government team enforce them are treated as external. So there should be an internal and external corporate governance is there. What are the governance practices adopted by the companies? Set values for the organization, design objectives, and prepare or design a good strategies for the organization, define roles of the people and behaviors of the people, and measure performance, measuring the performance of the people, accountability of the people. So these are the key practices of the corporate governance. Corporate governance nowadays applies to all organizational activities. We can apply all type of organizational activities. For the corporate governance, there is a legal forms are there, strategies are there, some ethics are there. This enable an organization can comply society norms, rules and regulations of the society, they are complying or not, and general accepted rules are following or not, provides benefits to the society. Our organization or our activities provides benefit to the society or not. Then reports prepared by the organization is fully trustworthy. It should be used for the benefit of the stakeholders. So all the governance include risk and control. Therefore, governance activities we can classify into three categories: governance, risk management and control. These are the three key points to be noted. Next, corporate governance process. Corporate governance process. Corporate governance process include two major components. Number one is strategic direction and the second one is oversight. Oversight means overseeing. Strategic direction means you need to be implement the plans and you have to develop the strategies for achieving our organizational objectives. This strategic direction point, we have to develop a business model for the organization. We have to set all the objectives of the organization, approach it to risk taking, risk appetite, how we can take risk, what will be the limits of the organizational conduct. So these are the activities of the strategic direction. Strategic plans needs to be implemented in the strategic direction stage. Second one is oversight, means overseeing. So it includes internal audit functions. Internal auditors are the team of people who are controlling the financial and other activities of the organization for achieving our objectives. So this internal audit and the oversight, they are the risk management activities. Internal and external assurance. What are the activities going on internally and externally for the success of the organization? They have to consider. 2 points are there. Strategic direction mainly includes plans. Oversight mainly include risk and internal and external assurance of the organization. So an organization, there should be a risk committees there. What is the role of the risk committee in an organization? They have to identify the risk of the organization. Connect the risk them to the risk management process. How we can manage the risk of the organization? That should be connected to the risk management process. And delegate them to the risk owners. Who are the people taking the risk? So the risk owners will be there. Delegation of these things to the risk owners. Then consider the tolerance level. What is the level of the risk? It can be tolerable or not. There is a level is there. So we have to measure it is in the tolerance level or not. These are the corporate governance process of the organization. We know that if there is a proper internal controlling system is there, it will minimize the risk. It will reduce the fraud which should be happen in an organization. So for effective internal controlling system, we have the committee of sponsoring organization of trade commissions. This we can call as COSO. What they are doing, these organizations are enable or it helps to efficiently and effectively develop a system of internal controlling system. How we can develop a proper internal controlling system for an organization? It can be effectively and efficiently we can develop a system. So this will help managing the financial reporting controls. Sometimes financial reporting fraud will be noticed. So in order to control the financial reporting frauds, these organizations are very helpful to manage, to develop the controlling system for the organization. Same model we have FCPA, Foreign Corrupt Practice Act. Why this? To prevent the secret payments. Simply we can say bribery of foreign officials. To prevent secret payments. Sometimes an organization is doing some secret payments to the foreign officials or the political party or some candidates for political office who is working in the foreign country, to prevent. So this section is anti-bribery provisions. So many briberies are going on all the countries. To prevent that one, we are introduced one act that is known as Foreign Corrupt Practice Act, to prevent the secret payments made by the corporates. Next, Sarbanes-Oxley Act 2002. Another internal controlling step. Sarbanes-Oxley Act. All these act, FCPA, COSO, then Sarbanes-Oxley Act are developed for designing a proper internal controlling system in an organization. This Sarbanes-Oxley Act was enabled or it is established in the year 2002. What is the role of the Sarbanes-Oxley Act? There is some provisions are included to new responsibilities of the public companies. They are imposing or they are enabling some responsibilities of the public companies and their auditors. This act created the Public Accounting Oversight Board. This act was created by the Public Accounting Oversight Board, PCAOB, which establishing audit standards. They are giving the audit standard for the companies. So the audit committee will be a very important part of the organization. Each company, there should be an audit committee there. This audit committee must consist of at least 3 fully independent members. At least one member must be a financial expert. The audit committee directly responsible for appointing, compensating the work of the independent auditors. Audit committee also establish to receipt, retention, treatment of complaints received during the accounting time or internal and auditing controls, confidentiality or some anonymous information received from employees. These are the key element of the audit committee. So in short, we can say audit committee is one of the best or the most important part of the organization. They can develop, they can establish proper internal controlling system for the organization. The balance of this portion that we can discuss in my next video, coming video. Thank you.